All right, let's look at this. So if there's no negative momentum on the 1 hour, of course we are doing a correction, but it's not going to be deep. It's not going to be a deep or high degree correction. You're looking at a bounce at level 3. If there's no negative momentum on the 1 hour chart, you cannot take out level 3, let alone test level 1. Now this segregation is at last correct. There is a 1-2 here, internal 1-2. There's a higher degree 1, higher degree 2 shown in green. This is a wave 3. We're showing it in an ending diagonal, but in reality it could become an Elliott structure. In order for the market to fall out of the Elliott structure, you have to see negative momentum on the 1 hour chart. If there's no negative momentum on the 1 hour chart, then you're bouncing at level 3 at the next cycle top. It's a level 3, 156, 100, and we check it of course when we go live, but you are bouncing. Evidently we're already 156.6. So the bounce is here. We're not going to 154.60 at this point. All right, maybe we go there later, but at this point, seriously speaking, we don't really care. We just care about being in the trend and making money. So we will buy level 3, that green arrow, half size, remember, full size at level 1. We stand to act, buy half size, level 3, 156. Add if the market should fall lower all the way to level 1 is 153.6. Okay, so if we buy here, definitely we're taking out. This is an extending wave now. If you're buying the level 3, this has become a 1, 2, 3, 4, and a 5. It will take out this 5. This is an extending wave. The labels will differ. Next time, you're not only going to 157.6, at least you're going to 157.6 to equate with that level here, 3.5. Most probably you're going to 158.5. What happens with this? We're looking at 158.98 and 159. This is the fluctuation high for the month of January. At that point, there is rejection at the fluctuation high. All right, remember we were looking at an A and a B and a C. We don't want to jump the gun. Everyone expects there is a market top. We don't want to be fooled. That's why we look very closely at momentum, but you'll find that most speculators are expecting a market top, and the market will feed on those tops. So we are pleased. We don't want to be fooled. We have positive momentum on the 1 hour chart. The market is going to be doing another top. We'll be advancing to 159. All right, so we were expecting an ABC, or people are expecting an ABC at this point. This ABC kicks up higher. It's only at 159 that you get an A and a B and a C. The picture will change. That's why we have double arrows here. We're now looking at this higher arrow. So this is of course going to be a 3 swing move. All right, at that point, it's only then that we can consider that we're going to be buying 154 and 153.90, top of level 1, and even maybe spike lower, because this is going to be an ABC, a deep correction. All right, so it's going to be a deep correction. It's only at that point that we can do our full purchases all the way to top of high degree level 1, lower boundary of that ending diagonal, 152.6. We buy half size, of course, at top of level 1, full size at top of high degree level 1. Okay, accumulate for the next run up higher. We don't have to bother about any of this now. We only bother about the coming short-term trade. Short-term trade is to buy against the top of level 3 here, 156 and 156 plus. When we go to 1 hour chart, we can of course decipher the Elliott structure, have a stop right below it. We're going to 159. All right, so we go now to trade management chart. We know that we have to buy above 156. This is shown here by that blue neckline. Others could see that there is a double head and shoulders. This is going to break lower. It is not going to break lower. Now we know because of the momentum picture, it's going to bounce higher and do a new head. We're being a bit conservative because we think there may be an A and a B, and that will just finish at 157.77. But actually, we're looking at 158 and 159. We're looking actually at 159. All right, so what about the entries now? We are being again conservative. Remember what is the rule, money management rule. We only take profit at inverted market, at necklines. We're not showing a neckline here, but of course everyone can see the market is doing an inverted head. There is an inverted shoulder to the right. There could be another inverted shoulder to the left, maybe a deeper head. There is a neckline here. We're not bothered with what's going to happen in future, only bothered with the move itself. This is the move shown here inside of this yellow sphere or yellow ellipse, and this move should most guaranteed take you only to 155.7. So we take profit at 155.7. This could break the neckline, move higher. It will be another day. We buy a retraction back towards the neckline. It's important to get the money in and be focused on the profit objectives.